What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 28th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we're going to be talking about the obvious question on everyone's mind, and that is whether or not the market has officially bottomed after its September correction. And I think this is a very fair question to discuss. We're going to be talking about a very interesting chart on Bitcoin, diving into the altcoin market, and along with that as well, taking a look at traditional markets as well. So we've got lots of things to discuss, and we've also got a sponsored interview towards the end with Long, who is the CEO of TomoChain. So stay tuned for that. You won't want to miss it. So let's go ahead and just take a quick look across the board on the market. As we can see here, not only Bitcoin and Ethereum up nearly around 2 to 2.5% here, but along with that as well, the broader market here looking really nice. Most cryptocurrency plays are in the green today, with very few exceptions down in the red here. The broader market, though, up in higher single-digit territory here. Some plays here doing double-digit territory. One of our plays for the month here in October coming up being Omise Go that we were looking to buy in the dip, and we did build a position in, so I'll talk a little bit about that later. But let's just go ahead and talk about probably the most important analysis here, diving into Bitcoin. So generally speaking, we've been setting in these higher relative lows to the lows we set back here in July and back here in May. So on the longer term chart, we're building a nice upward trend here as we break out of the long-term logarithmic wedge here. But this isn't the chart that I want to talk about today. What I really want to talk about is comparing a very interesting set of different types of kind of, well, not so much assets in a sense, I would say an asset, in this case Bitcoin, with an index of another asset, and that is the dollar. Now, usually people would say, well, Nick, in this case, you've got Bitcoin USD. You're kind of comparing it in a sense. And that is true to a degree. You have an actual direct pair with the dollar. But what's really fascinating is that as we tend to see measurements of the dollar's performance against other assets, such as other world currencies, we actually are able to use the Dixie or the DXY to measure how generally when the dollar goes down, Bitcoin tends to go up. And along with that as well, when Bitcoin goes down, the dollar tends to go up against other currencies. And this plays into a really interesting theory. Now, I'll talk about this in a couple of moments, but I just want to go ahead and demonstrate what we're looking at. So down here, this orange line is the Dixie in this case, and the Dixie is a really good measurement of how the dollar is performing against other world currencies. The euro, the Great British Pound, the Japanese yen, the Chinese yuan, whatever currency, right? It basically baskets and weights the dollar's performance against these other currencies. So we can see here, for example, in March of 2020, when we, for example, were just starting to get towards the kind of rally of fear in the global markets where stocks were starting to sell off dramatically. Bitcoin, as well as we can see here, starting to decline. This is when the Dixie bottomed here, around 95 points. And it's on a point basis. There's no dollar value. This is just a weighted index here. Going in here from 95 here in early March towards mid-March, going all the way up towards 103 points. And Bitcoin dropping down here towards around $5,000. Now, you're never going to see things align absolutely exactly, right? We're not going to see the Dixie top exactly and Bitcoin have its absolute bottom. But roughly speaking here, we can see very clearly that as the dollar grew in demand, when everyone was going towards dollars during this time period, whether it was, developing countries in this case who were dependent on the dollar, if you're talking about financial markets, where people were basically selling their stocks, selling their bonds, selling their property positions, and going towards dollars. Basically, they're taking a net long position. They're bullish on dollars if they're selling their assets. Dollar demand is really high at that time, and that's what led to the spike here. But after the Fed came rushing through, providing that pipeline of capital, and we got the major incentive for people to buy the dip into a variety of assets, such as Bitcoin here, we saw the Dixie decline. Ever since back here in March, we've been in a multi-month decline here, pretty much over half a year, and Bitcoin and other assets have continued to surge since then. But what's interesting is that whereas we for months here had the dollar declining, generally speaking, against other world currencies, we can see here that the lows started to get much and much closer. We started to kind of flatline here almost to a degree. And ever since we bottomed here, and we set in interestingly enough, a lower high on Bitcoin, we've actually had not only a slight pullback on Bitcoin, but also the Dixie has also had a slight rebound here. Well, interesting enough here, we actually had a repeat of what happened back here. We had, in this case, lower highs here in Bitcoin, a bottom in the Dixie, and this inevitably led towards a pullback in Bitcoin and a rise in the dollar. And now we're getting a more mild version of that, where we had a slighter sell-off here at Bitcoin and a slighter rally here for the Dixie. So taking this into account here, what are we really seeing here? Well, I think we're seeing a repeat of history and a solidification that Bitcoin's price performance is in many cases probably going to be counterintuitive to how the dollar performs. Now, why would that be? Well, what is the dollar seen when it comes to world currencies? It is seen as basically the standard. It is seen as the currency of all currencies. It is the king. Dollar is king, right? That's the general statement in financial markets, that the dollar is the supreme currency of the world reserve currency. And now we have a chance here for Bitcoin to possibly overthrow that, or at least be kind of the medium for all currencies. That's the philosophy here. And what's interesting is that over time, we've started to see more and more correlation here with the Dixie, right? As the Dixie started to really fragment and break down and Bitcoin solidified and the sell-off really picked up here, Bitcoin starts soaring. We're starting to see more and more correlations of this, and it's a very interesting kind of indicator in a sense. You know, taking a look at where the Dixie's doing, you're going to want to be watching the Dixie to see where Bitcoin's going to be going, right? It's not a guarantee be-all indicator, guys, just like nothing is. You know, nothing out there is going to be a be-all in this case. But at the same time, it can be very helpful for us in our portfolio of analysis tools to see where Bitcoin is heading. So my whole point here in this question here that we talked about is of whether or not crypto markets are bottoming. It is going to be very important to see Bitcoin in this case setting in higher relative highs. So price getting up here maybe towards 11,500 or 12,000. And setting in a new low, maybe even here on previous resistance at 11,000, right? And then the Dixie in this case continuing to turn over in its downtrend. This is what we want to see here. We want to see lower highs and lower lows on the Dixie, just to kind of draw that and kind of give you a visual cue of that. It basically be us going here, going downward, and starting to tick lower, setting in those lower lows and lower highs, right? This is what we want to see here for the Dixie. Now, I'm not really saying I want to bet against the dollar, right? I'm just saying in this case, for the net long case for Bitcoin, that's what we want to see. Now, this isn't just Bitcoin that we have to talk about. We have to understand here that understanding Bitcoin dominance, we've started to see altcoins take up about 40% of the market. So it's going to be important to see bottoming signs for altcoins as well. Well, altcoins are actually showing us some very good signs here. We can take a look at the decentralized exchange index that we created between RIN, Kyber Network, and Bancor, down 60% here from top to bottom. Very nice pullback range onto previous support in the past, back here in January 2019. In this case, over a year and a half ago, right? More than a year and a half, almost coming up here on about, I can't believe this was back in January 2019. And time moves quick. Anyways, right, you can see here 60% correction here in the market. Now we're starting to get a nice significant rebound. We want to set in those higher lows here, right? We don't want to come back down, roll over, and go down to lower levels. If we can start to set in a higher low here, that's going to be our sign here that the market's starting to rebound. Another one of our key plays here that I think is interesting to look at, Misa Go, making a steady rebound here. I mean, this has been making a crazy rebound. We actually really picked the bottom on this pretty well. I picked it up just here before it started to bottom here onto support. As you can see back here, this was a key level around 2,400 Satoshis. But again, plays like Misako doing very well. I wanted to go back though and actually take a look here. I meant to take a look at the oracles here. The oracles as well went through an almost near 60% correction, around 57.2%, and now looking like it might be trying to set in that higher low before it starts to tick back up higher. And again, the time frame for recovering these might be some time, but we just at least know that the valuations are at the range where we can get interested in them. So this gives us a broad way to the market here. This is looking very, very exciting to me personally. So we can get a general consensus here that, broadly speaking, the sell-off looks like it's over. How fast the recovery will come, that's probably going to be very dependent on how the Dixie performs. And if the Dixie goes down and people continue to grow fearful of the dollar, the increase in liquidity to Bitcoin will come, and therefore the increase in liquidity to altcoins will likely come as well. So again, we'll have to see. Who knows? I think these are very, very interesting telltale signs that we should focus on. But I want to go ahead and talk a little bit about stocks here because, as we're talking about markets getting inflows and outflows, as we've always talked about here on the channel, one thing that is very important to talk about is the inflow and outflow between different markets. And one of those have obviously that have been succeeding in this case over the last year or so, really ever since March, is equity markets. Equity markets have continued to chug along, and we've seen many companies go to radical new highs. A lot of that money circulating towards tech, speculative investments, all types of different companies that people are excited about as the new wave of retail investors or everyday people investing in stocks have come into the picture. But just recently, here in this past few weeks, we've seen the third biggest outflow ever of equities. In the month of September, equities have seen a massive outflow. But more specifically, through the week of September 23rd, we had a $25.8 billion outflow of funds, in this case, focused on equities, into other sectors. Now, this, again, generally speaking, was a bad week for a lot of asset classes. From my understanding here, this also, bond funds received in this case only about $1.3 billion in inflows. Precious metals attracted $1.4 billion. Nothing too crazy on this end, right? It seems like a net outflow of equities and assets abroad, right? You don't see it all just going into commodities. Of course, silver and gold have been pulling back quite steadily. But the important thing to note is just how much damage we saw this week for funds. Now, it doesn't sound like a lot, but for the funds in this case, this is a pretty telltale sign of the overall outflows. This isn't the full picture, right? But you can see here, 22.8 billion comparative to an inflow of 1 point something billion for each of the other categories. This is probably a telltale sign that, we need to be worried here for equities. The third biggest outflow ever in history. Pretty significant stuff. Now, you're going to get more of these kind of biggest ever outflows and inflows when you get to the largest valuations ever for equity markets, but it is still significant. It's very significant here because this isn't just simply because of markets of scale. It has to do with the correction that we had. We had a pretty stark correction here, the volume as well to match it. So I want to go ahead and talk about the three equity charts from best to worst. The best one here is the NASDAQ, which has been continuing to set in higher relative highs on the grand scheme of things. The peak here in September of 2018, peak here in February of 2020. And now we set at a peak here in September yet again in 2020. 2 years from when we set in our peak over here before our first kind of dramatic sell-off for the overall bull market, right? And now it's looking like we might have a chance for the NASDAQ to set support on here. Now, the interesting thing here is that, on the bullish case here, this looks really great. Turning previous resistance into new support and possibly setting up for even more parabolic rallies sounds really great to an investor like myself. But the one thing that I will note here is that if we don't make support on this very soon, that's not only going to be a very worrying sign, but I think a lot of investors are going to get very cautious here about the levels here of resistance getting, in this case, well, not so much resistance in this case, but these kind of important price levels here that have related to this line here. Starting to get shorter and shorter and shorter here. Support levels here, again, where price is finding support, getting closer and closer. So not so much on the resistance, I apologize on that, so much more on the support here. And you can see that the momentum is not going up as fast as it used to be, right? We're starting to see that the corrections are weighing it down, and we're not getting as much of high levels of support here that are keeping up with that momentum. So we'll have to see, again, taking a look at the weekly chart, right? Not looking too bad. Monthly, it doesn't look really pretty if you take a look on the standard chart, but it's not, groundbreaking. It could be that we rebound here and continue going vertical. The NASDAQ is where the strength is going to be. Tech stocks are where the focus and the rage is right now. It's where the capital's flowing. The second worst chart here, or kind of the medium-term chart, is the S&P 500 setting in still new all-time highs back here in September, but fading back down below the previous all-time highs in February 2020 and looking generally like it's going sideways here from the previous highs. Nothing too dramatic, not too much optimism coming into price. No record-breaking volume here like we saw in the sense of record sell-side volume back here in February and March. Not too much to say here. The important thing here is to hold on this support level. If we break below this, I would say that this is a pretty good telltale sign that the overall equity market is going to sell off. But Here's the worst chart overall, and that is the Dow Jones Industrial Average. If tech is all the rage, industrials are probably a nuisance in the market. They're not an interest whatsoever at all. The Dow Jones has still yet to set in a new all time high as capital injection into tech stocks has been going like crazy. A lot of that capital has to come from somewhere, and it's probably going to be coming from previous stocks. So there's been a major cycling going on, and in this case, we've seen it coming out of the industrials. Now, if the Dow Jones starts to break below around $26,000 here, right? This is a general kind of range where you had a lot of support here for the Dow Jones. If we start to really show clearly that price is going to go lower and it's going to be breaking around this kind of range, which was, generally resistance sometimes, also support. There's a very contested price range here for the index. That's going to be a very worrying sign here, where even though tech stocks might still hold up better, it could be a general weight down on the market. But again, all in all here, there's some individual equity plays that look interesting to me, but none of them are looking as interesting right now as the setup that we have for Bitcoin. The interesting correlation that's becoming a lot more predictable with the Dixie, the general altcoin space, with the kind of multiples here. I mean, just seeing plays like Omisa go up 15% today is fantastic. It's a matter of picking these bottoms, guys, not getting caught out, shaken out of the market here by fear and FUD. In this case, I'm very, very excited about where we're positioned. Why we're positioned in cryptocurrency markets is because of these kind of days and these kind of sets of performance. So in this case, guys, that's it for the broader analysis here. I want to go ahead and talk about two things before we dive into our interview. The WeFunder has been going off like a rocket here. We've got 4 days and 16 hours left for the equity crowdfunding, where you can get safe notes, which can convert into equity at a later date once we do our next raise. So you can get a stake inside Digifox, in this case, our UI into the decentralized finance space, or UI to DeFi. And last but not least as well, there's a form down below that I was going to ask if you guys could take the time to fill it out. It's just a couple of questions here that I just want to get some feedback from you guys on, where you guys feel it's optimal for me to, upload my videos, rather than me do it live or, do it, through a recording, whatever it may be. Just if you have the time, please fill that out. It means the world to me to just get some honest feedback. Tell me what you love about the show. Tell me what you hate about it. And all in all, let's go ahead and dive into this interview with Long from Tomo Chain. Alrighty, everyone. So in today's sponsored interview, we're sitting down with Long Vuong, who is the CEO of Tomo Chain, one of the many blockchain protocols aiming to not only bring scalability and throughput to transactions, but along with that as well, making its move into the decentralized finance space and trying to scale out decentralized financial services. I'm very lucky to be with you, Long. Thank you very much for making the time, man. And it's really good to see you again ever since we last talked at the panel that Tomo Chain had hosted alongside Teller and Aave and a lot of the other projects, where we had the opportunity to talk a bit about the kind of road from $1 billion locked up to $1 trillion locked up in DeFi. Just the other day, we hit 10 billion. So the space is moving extremely quick, isn't it?
Yeah, definitely.
Yeah.
And thank you for having me today.
Oh, absolutely. Long. It's a big pleasure on my part and stuff. And I'm really interested to continue kind of expanding on the fact that, DeFi is kind of budding up in all types of different places. We are seeing it throughout the Ethereum ecosystem, but I think that, what I've seen from Tomo Chain's product suite so far is really exciting to me. But I know you guys have a very big DeFi project you want to talk about today. But before we dive into this big announcement that you guys have for, the DeFi space and how you guys are making that move into automated market making, or AMMs, I want to go ahead and talk a little bit about what Tomo Chain is. If you could just maybe describe kind of like a brief explanation of what the objective is for Tomo Chain as a blockchain.
Tomo Chain is a smart contract platform, decentralized public chain, which is scalable and with very fast confirmation time and cheap fees. So we want to solve the scalability issue with Ethereum, and we did start Tomo Chain back in 2017. We launched the mainnet in late December 2018, and the blockchain have been running smoothly since then. And now we continuously building new products to support the blockchain ecosystem and to support DeFi and crypto finance in general.
Absolutely. Yeah. So to build on this long and to provide some context as well to what you guys have done at Tomo Chain, from my understanding, the consensus model has a little over 100, I think it's around like 150 master nodes in this case, who are coming together to provide consensus for the Tomo Chain
Mhm.
network. So because of this, you have a much higher level of throughput on chain. And this kind of provides an optimistic environment in this case where you're not only getting good decentralization and security, but also you can provide the framework for decentralized financial services like automated market makers, other forms of decentralized exchanges, and maybe even other DeFi products as well.
Yeah, I actually just have a conversation today when some people on Twitter asking about Capline, what are the strength of as a public blockchain beside Ethereum? And I think the strength of Tomo Chain is using the same tooling that Ethereum has, like MetaMask Remix. So you can put any smart contract, Solidity smart contract on Tomo Chain and it can run, right? And that actually save a lot of time because Solidity smart contract is very popular. It have standard and a lot of sample, a lot of auditing have been happening with Solidity. So at the same time, we have our own consensus mechanism called POSP, proof of stake voting. That is kept like maintained and secured by 150 masternode. And I think that's work really well because you can still inherit on the strength of Ethereum like tooling, Solidity developer, but you can have an environment where the fee is very cheap and the block is only 2 seconds. So I think it is ZS really strength that's not own as a blockchain public blockchain have.
Yeah, I was going to say along in that case, one thing that I've seen a lot in this space where I think a lot of projects go wrong is that a lot of them will provide the framework where you can develop in multiple different languages, maybe even traditional
Mm,
languages outside of Solidity, which, if we talk about the grand scheme of languages, it's still kind of a small group of Solidity developers, but that's where most things are happening. And sometimes these blockchains, where their virtual machines can run multiple different languages, they cut out Solidity. And I think that's been a big mistake I've seen with even some of the major protocols out there.
mm,
Whereas I think Tomo Chain provides that framework where you're saying, hey, make the transition from Ethereum. It's extremely simple. You can use the exact same language. All you're doing is moving into a new environment where you provide the throughput and the capabilities to really take these technologies to a much higher degree of scale, but while also maintaining some good, decent form of decentralization. And I think that's a good sweet spot that you guys have reached as a
mm,
project. I can see the kind of mindset behind it.
yeah.
Yeah. So I was going to build onto one more thing here. I wanted to go ahead and talk a little bit about what you guys are working on at the moment. As you know from when we had our conversations, I'm extremely excited about DeFi. I've been following it since back in 2017 from the likes of Kyber Network, and in 2018,
Mhm,
Aave and Compound, all these kind of new protocols coming up. But we know very clearly that one of the major applications that's gotten everyone excited is not only Uniswap, but automated market makers in general. This new framework to be able to have very simple market buy orders into any token you want, permissionless in a decentralized format. And you guys have a very exciting announcement today to talk about your own automated market maker for Tomo Chain. So I'm very excited to hear a little bit more about what you call LuaSwap, if I'm pronouncing that right.
Yeah, Lua swap. That's a correct uh, sound. I think I think AMM is a very important. Automatic making is a very important innovation. Not because of it's providing Capline the best price for you when you want to buy something, but I think the strength of AMM protocol is very scalable to maybe thousands of tokens in the future. And because if you think about it, if you list a token in a centralized exchange, right, it have a very good order book. But generally, you need to resource to a specialist, market making specialist to maintain the order book, right, and to get the liquidity. But that doesn't scale because market maker most of the time they want to focus on volume, right? So they focus on the token with the most volume, and that's where they can uh, justify the time and the resource to market make for a certain token. But if you are a new token and you are a new project, it is not feasible. And um, that's why I think, for example, Uniswap with their AMM algorithm, the the constant function algorithm, that's have like really enable everyone to be a, a maker by entering the pool, right? So everyone can be a maker, and then it's easier for the project to lead a token and have the token have a decent volume of trading. And I think recently we saw that Uniswap actually consistently have like $500 million of trading volume every day, which is actually exceeding most of the major uh, centralized exchange in spot volume. So I think market is kind of like seeing the innovation in the automatic market making. And there's other improvement, right? In some of the project like Curve, which is automatic market making for stablecoin, or Balancer, which add like adding more pair, more than one pair. You can add more than one pair in a Balancer pool, or you can have a different weight. I think this is very exciting innovation. But I also think that the design space for the AMM pool, the automatic marketing protocol, is still open. We still do more. And in my views, like, at some point, the decentralized exchange volume and the decentralized exchange space can uh, can be way bigger than the centralized exchange space right now. And I think that's where Lua Swap coming in. We coming in with some new idea, right? Firstly, we want to build a multi-chain liquidity protocol. So it's not just a swap protocol on Ethereum, but it also running on Turbo Chain. It's also running on Solana or Binance Smart Chain later on. And I think it would be exciting for all of these protocol in different chain can like interact with each other and support the protocol for new token, support liquidity for new token.
Long, I gotta say, above all, I mean, this sounds really exciting. I mean, so obviously you have a few things right off the bat, multi-chain support in this case, being able to communicate with different protocols, tapping into the liquidity of different tokens with the throughput that Tomo Chain offers. But above
Mm.
all, I think that what you're doing in this case is also kind of changing a bit of the structure of the AMM in this case, or adding some new benefits that we don't really have with maybe major protocols like Uniswap in this case. So
Mm.
I would love to continue just
Yeah.
kind of talking a bit more about,
Mm.
in this case, Lua already has a lot of benefits in this case from what we talked about. But what are some of those other features or kind of ways that you guys are trying to innovate on top of the automated market maker model?
There are several small improvements that will be added into Lua Swap. For example, if you think about it, like uh, if you look into the evolution of the AMM space, we have a very interesting case of sushi swap coming out like I think a month ago, a month and a half ago. So they have a very good bootstrapping mechanism of using the Uniswap LP token to stake into Sushi Swap, and then they will run a migration script that bring the liquidity from Uniswap to Sushi Swap. But I think it's not really zero sum game because as it turned out, most of the liquidity that's kept like stake into Sushi Swap are new liquidity. It's not like the people who already in Uniswap running to Sushi Swap, but actually it invite a lot of new people who never try uh, liquidity providing into the game, and then they stake into Sushi Swap. So I think one of the new things they did with the actual swap itself is they have a token that's kind of like incentivize people to liquidity providing. They have they take a little bit of the fee for liquidity provider and share it with the token holder. I think one of the improvement Lua Swap will have is we will be running something like time vesting, time decaying fee. So if you are a liquidity provider in Lua Swap, you still get the full 0.3 percentage of the fee lie in Uniswap. But if you are a short-term liquidity provider. When you withdraw the liquidity, you will have to pay a fee, right? And that fee will go to the token holder instead of. So if you are a long-term liquidity provider, you will be happy because you get the full fee unlike in SushiSwap.
Yeah.
Um, yeah,
I was gonna
but
say,
also right, like in the case of token holder, you can still get some benefit from the protocol. And I think one another thing we do, I think is interesting is we have a vesting schedule for the token holder. So you are liquidity providing, you get the token, but you don't get the full amount of token right away. The token invest for 1 year. So that incentivize you kind of like to stay with the protocol, kind of like to stay around and help out with the governance. I think that basically that the main goal of having a good governance by the token holder.
Long, I gotta say, you've done something that I've been kind of dying to see, not just in AMMs, but kind of the broader kind of yield farming or governance token space, and that is an incentive to actually stay around long term.
Mm.
Whether that be something like a mechanism of lockups, or as you mentioned, like I don't even want to call it like a penalty, but in a sense, kind of like a fee in this case for kind of withdrawing out early, just kind of coming in, providing liquidity in the short term and getting out. This is the problem that I've seen because I really don't think that yield farming in the long term is going to
Mm.
be extremely sustainable, at least the way that people are doing it now. And
Right,
along
right.
with that, if you want something like Tomo Chain to stand out, you're going to need those people who are willing to say, "Hey, I've got $1 million of liquidity in tokens and all types of different crypto, and I'm willing to lock it up within this AML. I believe in Lewis Swap." And rewarding those
Mm.
people promptly, if, for example, not only but maybe for example, Lewis Swap's just okay, it's successful to a degree. But if it's really successful, there's a major benefit for people who are in it for the long term. And I think this gets people to focus a lot more on technology and thinking a couple months to a year out about what AMM is going to be the market provider in this case. And I think that having
Mm.
those longer term incentives, you'll attract the right people as well. So I think that that's really
Right, right.
fascinating. I've been meaning to see Uniswap or
Yeah.
another protocol do something similar. So hats off to you guys on that.
Yeah, I think it's a very important that we prevent kind of like a short-term liquidity provider to come in, right? And they farm a lot of token and sell it immediately. And then so when the farming yield drop, they kind of like get out and go in with other protocol. I think that would not be sustainable for the protocol, right? And yeah, I think the vesting schedule and what we implementing on kind of like the delaying fee, the fee for withdrawal, we have to prevent that to happen. But at the
Absolutely.
same time, right? At the same time, if you think about it, um, a lot of kind of like debate nowadays between the different farm, right? Is about how many total value lock, right? You have. So if you have a lot of total value loss, you are better. But I don't think it's the right way you think about it. To think about it because uh, if in the case of Sui, right? Sui is clone of Curve, not Curve Finance, and they have very short-term inflationary emission of the token. So a lot of money coming in, and the total value lock got up very fast, like up to like $600 billion. But then it dropped off like to 100 billion
Yeah.
just after 2 weeks. So I think that's not that could be kept like good for hyping in the short period of time, but it's not sustainable in the long term. And I think so. We don't want that to happen with Lua as well.
Yeah, Long, I was gonna say, I think we might have talked about it during our panel discussion that total value locked up is like an okay metric because the problem you have is that if I, for example, as you mentioned, create some kind of DeFi protocol, my native token makes up a majority of the total value locked up, and let's just say the token price has gone up a lot. It doesn't really mean that I'm inputting new liquidity. I'm not inputting new value. We're not getting new users. It's so easy to manipulate those values in that case. And I think some DeFi protocols push that a little bit. So I completely agree with you. It should be about, what's better tech, what are people actually using? And I think above all, just seeing the work that you guys have done, is one of the emerging projects, building a framework to create decentralized exchanges and decentralized products. I think you guys are going to do great with Lua. So for those who might want to learn a little bit more about like the Lua swap system that you guys have built to learn more about Lua token, or maybe even just Tomo chain, I just want to go ahead and let all you know, I'll leave a link down below in the description. But
Mm.
in this case, long, are there any great resources that people could pull to if they want to build on top of it, if they want to use these systems?
I think one of the important thing about AMM pool is that it is going to provide price feeds, so you can build other thing on top of it. So I think, but at the same time, you need to have a good liquidity for the pair to ensure that the price is accurate and reflecting kind of the market supply and demand. I think Lua swap is but at the beginning, at the moment, we are having the staking up yesterday, right? And the farming will start on Monday, so like 2 days from now. Um, yeah, I think the swap actually launched, I think, in 4 weeks from now. Um, I think it's like in crypto finance, I think the two most important application is decentralized exchange. It can be order book or it can be AMM, but it seems to me AMM would be a better solution for DeFi. And the other application is lending protocol. So I'm excited about what is happening in the DeFi space. I think it's have a lot more room to expand, and we definitely want to stay in the space for a longer term and build more things. Yeah.
Well, Long, I think you guys have proven that over the last few years since you kind of started working on Tomo Chain back in 2017 when you took the mainnet live in late 2018. And I'm just excited to see, again, more competition flooring, more types of kind of proposals on how we can build these types of decentralized systems. But I got to say, above all, Long, it's been a pleasure to have you here. It's nice to just get to catch up again, see you guys are continuing to build. And thank you very much for making the time just to chat about it a little bit.
Thank you, Nick. And yeah, let's try Lua and farm it.
Absolutely. I'm going to give it a try myself.